Good morning, everyone, and happy Friday. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here, and TGI Friday. I hope you're all getting ready for a wonderful weekend ahead. As usual, this morning we'll be taking a look at exciting stock market news, notable earnings reports, which are a big focus today, and which stocks are the morning's biggest gainers and losers. And if you haven't downloaded the TipRanks mobile app yet, you can do so by following the link down in the description if you want to access some of your favorite research tools on the go. Now let's get right into this morning's exciting stock market news. U.S. stock futures are in the red this morning. The market is on a downturn after some disappointing big tech earnings, which of course we're going to get into in just a couple of minutes. We'll also be hearing jobs data later this morning. Right now, Dow futures are down 0.24%, S&P 500 futures down 0.66%, and the tech-heavy NASDAQ down 1.2%. Shares of Nordstrom are soaring this morning, currently up 28% on a report that activist investor Ryan Cohen has taken a big stake in the company. Cohen is planning to recommend changes to the board to enact cost-cutting that will reverse the stock's poor performance, according to a report from the Wall Street Journal. It is said that he wants to replace at least one director and is focused on the former Bed Bath & Beyond CEO Mark Tritton, who the activist believes could be conflicted. The Nordstrom stock is currently rated a moderate sell among analysts, with an average downside of 17%. Tesla has reported sales of their Chinese-made electric vehicles for January, and they saw an over 10% increase year over year. They sold 66,051 EVs in January, and those sales were up over 18% sequentially. They said that the company plans to produce an average of 20,000 units per week at their Shanghai factory over the next 2 months. Analysts currently rate the Tesla stock a moderate buy with a slight upside of over 2%. And as of today, XPeng has officially launched 2 of its EV models in Europe. Those models would be the G9 SUV and an optimized P7 sedan. Both of the EV models are on display at the e-car expo in Stockholm this weekend and will begin deliveries in 4 countries, including Denmark, Norway, the Netherlands, and Sweden later this year. Analysts currently rate the XPeng stock a moderate buy with an average upside of 6%. Now, moving right along to those very notable earnings reports. Typical for a Friday, the after hours today is quite quiet. This morning, somewhat quiet as well. We'll be hearing from companies like Twist Bioscience, Regeneron Pharmaceuticals, and Sanofi. But all eyes were on the big tech names that reported in the after hours last night. A lot of these big tech names did see gains leading up to their earnings, but are now falling in the pre-market this morning. One of those being Google. They were on the rise after announcing their own rival to ChatGPT, but are now falling in the market following their earnings. The Alphabet CEO said that Google will be making its own chatbot available to users as a complement to Google Search. This would be their answer to the popularity of ChatGPT, which was developed by Microsoft. Alphabet has its own AI technology that could be used for the chatbot called Lambda. But then came out their earnings. They did miss on both earnings and revenue and had a slowdown in advertising spending. Their earnings per share came in at $1.05, missing expectations by 14 cents per share, and revenue of $76.05 billion missed by $440 million. Their stock is still rated a unanimous strong buy with an average upside of over 18%. We then heard from Amazon. They posted weaker than expected profits and mixed results where they missed on earnings but beat on revenue. That was due largely to a loss on the company's stake in electric truck maker Rivian Automotive. The company's revenue outlook for their first quarter was also well below consensus estimates. Their Q4 earnings per share came in at 3 cents, which was 14 cents shy of analyst estimates, while their revenue of $149.2 billion was up over 8% year over year and beat expectations by $3.43 billion. Analysts currently rate their stock a strong buy with an average upside of 17%. Next up, we have Apple, who came out with disappointing results where they missed on both earnings and revenue. CEO Tim Cook said that Apple is not immune to current difficult economic conditions and that he believes iPhone sales would have grown year over year without the production issues they faced in China. Their revenue of $117.15 billion did fall 5.5% year over year and came in $4.5 billion short of expectations. Meanwhile, their Q1 earnings per share of $1.88 missed by 7 cents per share. Still, we have new buy ratings coming in from analysts today, coming in as an overall strong buy with an average upside of 15%. Then we have Ford Motor, and they gave us a lot of tidbits to consider. The company posted mixed results with some decent guidance and announced they'd be paying a special dividend. They also sold the majority of their stake in Rivian Automotive, and their CEO commented that they left $2 billion in profits on the table. He said that we should have done much better last year. We left about $2 billion in profits on the table that were within our control, and we're going to correct that with improved execution and performance. Operating profits are expected to drop this coming year due to a mix of factors, including higher interest rates, falling car prices, and rising labor costs. They reported Q4 earnings per share of 51 cents, which fell 11 cents shy of analyst estimates, while their overall revenue of $44 billion was up over 16% year over year. Their stock is currently divided among analysts, coming in as a hold with a slight upside of over 4%, with a mix of buy and sell ratings coming in today. And then we have Qualcomm. They came out with mixed results and guidance that fell short of expectations. Their Q1 revenue of $9.46 billion was down over 11% year over year and fell $110 million short of expectations. Their earnings per share came in at $2.37, just beating expectations by 2 cents per share. Their stock is currently rated a moderate buy with an average upside of nearly 4%. I know that was a lot of info for each of those. I tried to trim it down to just the highlights, but a lot to digest. Now let's move right along to the morning's biggest gainers and losers. Our biggest gainers this morning are led by Nordstrom on the news of Ryan Cohen taking that big stake. Trading under the ticker JWN, they're still currently up about 28%. They're followed by Braskem SA under BAK, up nearly 5%, and Banco Santander Chile under BSAC, up 4.9%. And our biggest losers this morning are led by Bill.com after their earnings report where they had disappointing future guidance. Trading under the ticker BILL, their stock is down nearly 22%. They're followed by Synaptics under SYNA, down 10.6%, and Atlassian under TEAM, down 9.35%. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell, and we might have a very interesting day in the market ahead of us. If you made it to the end of today's video, don't forget to hit that thumbs up button, share this video with some of your friends, and say good morning in the comments. I always love hearing from you guys. Thank you so much for watching. Have a fantastic weekend, and I'll see you back here on Monday.